You're confused. You're trying to figure out which loan to choose, the FHA or the VA, and you can't figure out which one. Time's ticking, but you don't understand what's the difference between an FHA and a VA loan. Everyone asks me, Josh, should I go FHA or VA? Which is better? Or you know, which is the better offer, the FHA or the VA? Here's the truth. If you're eligible for both, choosing the wrong one can cost you $300 to $500 a month in hidden taxes. If you're a veteran in Montgomery County, you've earned a shortcut. If you're not, you need to know how to navigate the FHA ladder. Let's break that down for 2026. The core differences here. First, the down payment. FHA, you're putting down 3.5% on a $500,000 house in Harleysville. That's 17,500 out of your pocket before you even talk about closing costs. VA, it's zero, period. You keep that 17,500 in your bank account for furniture or emergency repairs. Second is the mortgage insurance, the monthly tax. FHA has a forever tax called MIP. You pay it every single month for the life of the loan. It never goes away unless you refinance. VA has zero monthly mortgage insurance. That right there is usually the $300 difference in your monthly payment. Now let's talk about the funding fee versus the UFMIP, the upfront cost. Both loans have an upfront fee, but they work differently. FHA charges a 1.75% upfront premium. VA charges a funding fee, usually 2.15% for the first time use. The pro tip is if you have a service-connected disability of 10% more, that VA funding fee is waived. That makes it the cheapest money on the planet. Credit and appraisal. Here's the reality check. People think that FHA is easier for bad credit. Not necessarily in 2026. Both allow for scores in the 580 to 620 range, but VA lenders are often more flexible with your residual income. That's the money you have left over after bills. The appraisal. VA appraisals get a bad rap for being tough, but in this market, they just want to make sure the house is safe. Don't let a listing agent tell you that a VA loan is harder to close. It's government-backed gold. The summary here is that, the bottom line is if you have the DD 214, the VA loan is almost always the winner. It's the lower interest, zero down, and no monthly insurance. If you aren't military, FHA is your best friend for getting in with a lower credit score. If you want to see what exactly your monthly payment would look like for a house in 19426 or 18964, if you're a buyer and you're doing your research on types of loans because you're getting serious about buying a house, head over to buyrealestatepa.com. Connect with me. Or if you're selling a home in Bucks County, Montgomery County, or the main line, head over to sellrealestatepa.com. Stop guessing, start knowing, and let's get you moving.